I'm Josh Smithberger with Delphine Trading. I'm a trading strategist there. In this video, we'll be going through an in-depth explanation of trade rules. So when we get into the system, we're on the dashboard. To get to trade rules, which is an essential part in the backtest, we have to create entry-exit dates, and then we also have to have trade rules, and then we can run backtests. So this is just going to cover the trade rules. So there's two ways to get there. You can go to the organizer and click trade rules. And this will give you a list of all the trade rules that you've created previously. So these are available when you go in to do the backtest. If you want to create a new one, we can do this quick create and then trade rules. So the first thing you have to do is name it. So we'll do bull call demo. And you can put in a description there if you want. So the first thing in the opening, and the I buttons are the information buttons. So if you click on those, they have detailed explanations of all the different fields. So if we select bull call, the first thing I want to show is if you hit this question mark, it'll give you a basic layout of a bull call spread. This is a generic where we just created prices and strike prices. So you can look at that and just see, okay, we have a max profit that's limited. Here's cost, break-evens, max loss for this generic example. And the determinant, and that's what's driving the profits for this. So if you go into other strategies, let's just say a bear call, it'll bring up that graphic also. So we'll go back to the bull call. So the minimum reward, that's just the amount of profit that you can take based off of how much premium you paid. So if you put in 10%, then you have to be able to at least make 10% off of what you paid. Report context, that's just going to be trend for 95% of all backtests. If you're doing earnings, then you'd have to use either the runner or the earnings. And if you go through the wizards on the earnings, it'll automatically pick the report context. So pretty much you just have to use trend. The spread, you can modify the spread as to the market. You can do the mid price, or you can put in limits. So if you want to do 60% of the bid and 40 of the ask, you can do that. So we'll just use mid price. Next, we'll just go into the stops. Once again, the I button over here will tell you exactly the details for this. Ignore exit dates. So when you create entry exit dates, say we had RSI entry, when it crossed above 30, and then exit when it crossed above 70. So if you say ignore exit dates no, then it'll use that criteria, the cross above 70 as an exit, along with your profit targets and stop losses. So if we say ignore the exit dates, then it won't use that cross above 70 as a way to get out of the trade. It'll just manage it by profit and stop loss. Or you can put in other criteria into the winning. So we'll get into those, but so let's ignore exit dates, stop. So if you put in 2-month expiration, you say stop after 20 trading days, then it'll exit the trade at 20 trading days. Also with you can put it as an exit before day's expiration. So if you want to get out a week out, you can say 5 trading days before expiration, exit to trade. So that's the stops. The secondary confirmations, you can click the I. We have 2 different ways that we can do a secondary confirmation. So the first one is for just state modeling. So you can hit, I only want it if it's in a bullish state, when the RSI crossed above 30. or you can do bearish, or you can select one of the individual states. And you can use it for, if you leave symbol blank, then it'll use whatever symbol tripped it. But you can also put in, bearish SPX. You want the S&P index to be bearish, or you want it to be bullish as a secondary confirmation. So you can put in any symbol in our system, and we have about 1,300 right now. So that's the state modeling part of the secondary confirmation. The other one is the signal. So these are custom signals that you would have to create, and you can do that in this quick create signal button. So if we were using the RSI, and maybe we wanted, you can type the search in different criteria. So maybe we wanted also for the EMA, the 5-day EMA to be above the 15-day EMA. You can click the criteria, it'll say here, the 5-day crossed above the 15. So anything that you actually create in there, and it'll be filtered based off of that signal that you create, in addition to whatever you already created with the enter exit dates. So the bottom part, we can also do, you have to select one of the two, delay or reject. So, if we just go back to the state modeling and we say bullish, so for the RSI model that we created, when the RSI crosses above 30 and it's not bullish on that day and we push reject, then it'll reject the trade and it won't use it. If you do delay entry, then it'll hold that until it, whatever symbol goes into a bullish state for our state modeling. So that's the difference. So it'll just hold that trade until it turns bullish. This one will just reject the trade, period. Option expiration. So you have a couple different variables. You can do monthly options or you can do weekly options. You can type in them manually or you can do state modeling. So the state modeling will be automatically based off of the average days that the symbol is in the current state. So if it's in state 1 and the average days that it stays in state 1 is 45, then that would be what your expiration would start looking at, 45 and above. So if we do manual and we type in 60 days as the minimum and 120 is the maximum, it'll start looking for expirations at 60 days and then it'll go to 61. So it searches min to max. If it can't find anything within that time period, 60 to 120 calendar days, then it'll reject that trade. For strike selection, there's a lot of different variables under these strike selection models. The first one is the round. So if you only want to do $1 increments, if there's 50-cent ones in that symbol, then you can select the one, or you can do $5. So it'll only do like 95, 100, and 105. For the bull call, we have to buy one and then we're selling one above it. So you can select different strike selection models for this. So if we wanted to buy one call, you can put in delta. So if we wanted to do 45 to 60 delta, so it'll start looking at 45 and then go all the way to 60. So it searches min to max. If you want to switch it, you can do max to min. So then it'll search from 60 all the way back to 45. If it doesn't find anything within that range for that symbol, then it'll reject the trade. And it'll be displayed in the trade summary on the bottom saying rejected trades, and it'll tell you, no delta found. So we also can do targets, and that's for state modeling. We can do indicators, standard deviation, so you can do the upper or lower standard deviation. So if we want to do lower standard deviation, we're going to do one. You can do two. You can do 1.5, and you can select above or below. So it'll calculate the standard deviation for that expiration, and then it'll select the strike right above it or right below it. So if we do above one standard deviation, that would be our buy. And then on the sell, we'll go through the other ones here. You can do expected move. So that's the market maker's move. So you can do below one times the expected move. Percentage from current close. You can do, above 3%. Strikes from current close. So you can do above or below, 2 strikes. So you can put in whatever variables you want on most of these. Minimum points from leg. So you can say I want at least 1, point above. Or I want 3 points above at a minimum. And then you can say exact points if you want to, and then and this is from the leg, the other leg. So the buy leg. So you can see these are from the close, and these are from the other leg that you had already selected. So if we want to do strikes, so this would be strikes from the lower, right above the lower standard deviation. So you can say above, 5 strikes. You can put them 4. They have to be whole numbers. So we'll just do strikes from current close above 2. And once you create these and you run the back test, you can come back and modify it and then rerun it quickly. You can change, any of these characteristics here. So the next one is management, trade management. So typically it's defaulted to close on the lose stop loss and the profit that you're looking for. So for the bull call, it defaults to max profit. So that would be a calculation. I put in $1,000, I can win 500. So you want at least 25% of that max profit. And that would be your exit, one of your exit criteria, along with whatever exit signal you had put into the entry exit signal. You can also select initial cost. So if I put in 1,000, I want at least 250. And those are the ones that pretty much apply for the winning here. On the stop, you can put in max risk, current risk. A lot of these are the same for this particular model, but they apply for other types of strategies. So if we just put initial costs 50%, you can do that. So it defaults to the close. If you want to do something else, those are called adjustments. You can click this drop down. So when the profit hits 25, you can scale down, you can hedge, you can roll the time in strike. So these are all the different options. You can just convert to a long call. So you can change those different ones. Scale down 50%. And then that'll create another stage. So you bought it, you scaled down, say you had 10 contracts, now you have 5. So then, that's when it hit 25%. So now you have to say, okay, if it, based off of the max profit, once it hits 30%, close the trade. And you can do another adjustments. You can do up to 4. The 4th has to be closing. So you can do really like 3, and then the 4th will be the closing. So if we go back to close and we open up the expand button here. So these are the other options you have for closing a trade for winning percentage. You can do a trailing profit trigger. So if it hits 20% profit, I want to keep at least half of that. You can do it on the underlying price. So if the price goes up 5%, then it'll close the trade. You can do position delta. You can do individual legs. So if sell one leg, that's a delta less than 20, then it'll close out the trade. You also can go into the break even above or below. So those are all available, and you can change those. You can put in multiples. We'll just leave it as a basic right now. 25% on the initial cost. So the same thing happens on the losing side. You can add in different, underlying price, position delta, leg, strike is greater than, strike plus is less than, strike minus. So you can put in all different things. So, if you're looking for it to cross above a 50, the buy leg to cross, I guess the sell leg to cross about 50, then you'd close it out. You can put that in there. So all different types of options within here. And then on the bottom, you'll have special adjustments. Those will be different for, depending on the strategy you have. So for the bull call, we can do short leg profit. You can close the trade, or you can just convert it to long call. If your short leg profit hits 30%, then you would close that short leg, and then you'd be just long. Then you can also do the roll position. So you can roll time out. You can roll time in strike. And you can do that, say, whatever, 7 days before expiration or 20 days before. So those are all the different options for the bull call. If we go back in and we look at something like an iron condor, so you have a lot more strikes here. You have different adjustments. You have one-sided adjustments. If touched within X number of days, you can roll the call, roll the put side, and you can always click on the question mark to see the basic layout of the strategy. And the adjustments down here will be different for depending on the strategy. So if we look at long call, there's going to be a lot more strategy adjustments. There's 16 that you can convert to. So as the in-depth explanation of the trade rules, you can also go into the help guide, and there's good information in there, or you can just click the eyes on the different sections. If you have any other questions, please contact us at sales@delphiantrading.com or at the number listed.